My name is Michael Michie, CTO at EverseTechnology Africa. Today we'll be discussing artificial intelligence and machine learning in insurance, in fraud detection, underwriting, customer service, and a few other use cases. Now to start off with, let's start with a bit of history of where we are now, where we've been and where we are now. Previously, AI, that is before November of last year, was commonly a B2B product where we had AI chatbots and virtual assistants being developed and being given to businesses for them to run a few operations and to assist with their day-to-day. This would be the likes of Jasper. Come November of last year, we saw developments where AI became now a B2C tool. Where it was publicly available for users either for free or at a cost. And this is what has led to now sort of a boom and an awakening and realization of how AI can be used within the insurance space and other industries. With this boom, of course, comes the large language models, which are what dominated the space late last year and still moving on to this year. Now, these large language models have been customized for purposes such as chatbots and virtual assistants, and that is just barely scraping the surface of what this technology can do. And with that out of the way, let's forget about the chatbots and the virtual assistants. Let's look at some more heavier, complex things that we can use artificial intelligence and machine learning for. And maybe one thing to kick off with is fraud. Fraud, of course, in the insurance space is a painful issue, as with most other industries. Fraud in particular within the insurance space could be through false claims or wrongful valuation of whatever assets need to be insured. So what we have AI coming in is being able to use artificial intelligence, for example, computer vision, to determine the state of a particular item, whether you're trying to insure your mobile device, your car, your household. Video can be taken or photos can be taken, and then AI through computer vision can analyze the quality, the wear and tear of this particular item, and then put up a value. So this actually helps when it comes to getting to know the value of your asset and what premiums you'll be paying. Another use case around the same area for fraud is just simply fraud detection. Previously, fraud detection tools relied on very specific patterns, which had to meet a certain criteria in order for you to be classified as fraud or to be detected as suspicious fraud. What we now have with AI is that we have a lot more data being used in form of assessment to help these AI tools decide, is there a potential risk of fraud or is there fraud that is happening? So the rule book is sort of out of the door. The AI has learned the existing modes of fraud or the most common modes of fraud based off of the data it has been trained with. And then from there, it's able to infer what looks like fraud or what doesn't look like fraud. And in some cases, it's able to predict patterns that are suspectful of being fraudulent in nature. And so now we're not only doing fraud detection, but now we're doing fraud prevention, and we're able to predetermine that this particular pattern or this particular series of transactions looks to be fraudulent. On the flip side of fraud detection and fraud prevention, we have AI being used as a deepfake to create deepfakes. Now, the term deepfakes, unfortunately, is used too loosely. There's nothing fake about them, at least not in terms of their impact and their reputational damage. And in the case where if you are putting out a claim and you need to show damage towards some of your goods, you may have a photo generated by an AI model that does text to image or text to video. And you can create very stunningly realistic videos that would show that, yes, this particular item was damaged in this particular place. You can take existing photos and then edit them to make them look damaged, all quite easy, all quite accessible over the internet. And then this can be sent over to your insurer, and then your insurer is actually convinced that this actually has happened, and they may actually process the claim for you. So there is that flip side of how it can be used in fraud and can be leveraged by malicious actors. One other key thing that AI has done is, of course, in automation of processes. A lot of tedious activities, underwriting, filling the claim forms, and all of that is a tedious process for both the user, the consumer that is, and the insurer's staff. And so what we have now is AI is able to come into place. You can simply have a chat with an AI assistant. It will ask you a few questions and it will autofill the document for you as required, or it can actually help in the assessment of these documents when it comes to the staff end. And while we look at this, we also now start looking at more advanced uses of in fraud detection. For example, if you're doing a lot of OCR, you can actually now begin to see patterns in your, especially if these are handwritten documents, I mean forms which are being filled, whether application or claim forms, you can see the handwriting pattern of your users, and then you can actually detect when, well, this is a forgery of either a signature or a handwriting, and you're able to prevent that fraud. More complex use cases around this go as far back as to actually taking on the challenge around why we have such low insurance penetration within our market and a lot of other markets. I think the low penetration of insurance products and services is particularly due to human nature and psychology, and with how we generally advertise these products is that it's a blanket advertisement which is not tailor-made to specific individuals. So what we see now now that we have AI tools which are able to crunch enormous chunks of data, not just transactional data or customer information data, but behavioral data and data from other third parties, then now we have an opportunity to see, why do I have a bias against insurance products? And at that stage, you can custom make products once this AI tool has determined why. The next step is determining how to get me on board. Why am I not on board? And then the AI tool can then determine how I get on board. It may be I have a bias that, well, it's never happened to anyone around me, so I don't need the insurance. Well, then how do you create an insurance product for me that then circumvents that particular bias? And then that's what you have as a unique use case for artificial intelligence tools and machine learning, is that you are now able to create personalized tools that actually target the individual. And at this stage, it's not just offering you different premiums. It's actually going to see, do you prefer embedded insurance or micro insurance? The two, of course, being very, very different. For example, the embedded insurance, it could be that with a certain purchase of a certain item, I have the option to opt into an insurance premium or into an insurance service or product. Well, with micro insurance, it could be that with the help of AI, we're able to track when a particular, if for example, you're insuring your car, the insurance only covers it when it's on the road. When it's parked at home and it's considered a safe environment, then there's no need to pay for full coverage or any coverage at all. And that would be micro insurance. So quite a lot of use cases to help push customers into insurance. And I think that's particularly helpful because the insurance penetration is quite low. And this also creates an opportunity for the insurance industry to actually show how AI and human behavior can be leveraged to create new products and services. Of course, with all these advancements, we are also going to consider the risks that we are facing with all these insurance tools. And of course, the more complex your model and the more data you need to feed it, more questions arise around privacy and data protection. And so, of course, as these tools are being developed, it's always very important to ensure that you have in place the right you've set up the right guardrails in terms of the data that you're using, ensuring that the data you're using is accurate, it's properly labeled, and that it was even sourced legitimately, meaning that there was no breach to any data subjects' rights if you are using data that is associated to individuals. In this case, where data has been anonymized, I think that's a very good step, and that goes a long way to building more robust and transparent AI models for the purposes of insurance. I think one other thing that needs to be discussed around AI and ML within the insurance and insurtech space is just simply how do you actually decide what you need AI for. I believe we've had quite a lot today in terms of all the various developments within this particular space. In particular, I don't think organizations should rush to AI without determining a set of credible use cases and then going on to explore that they have the data available to actually train these models on these use cases. Of course, the alternative is to get an out-of-the-box solution, which could be just maybe getting an API connection to an LLM or any other AI model out there that has been built for a particular purpose. However, then you're not really sure of the type of training data that was used and whether that training data correlates to the kind of data you will feed it and what kind of results you will get. So when it comes to when it comes to building your own model, the first step that you should do is determine a viable use case or a set of viable use cases. And then after that, determine that you have the right data to be used. If you don't have the data, where can you source the data? Most organizations that actually do proceed down this path of building their own models, we only have about 80%. We have only 20% of AI models actually reaching into production and finding their way to the end consumer, whether that's to an organization or to individuals. So with 80% failing, part of this failure comes into how these tools are being developed. There's a lack of understanding just how much data you need, the quality of data, the type of data, the labeling of that data, and all that entire process, what we call exploratory data analysis, is very important for this case. We then also have, of course, building the right pipelines for deployment. So we have a new field called MLOps, which is machine learning operations, which ensures that one, as you build these models, they are secure. The pipeline is automated in any instance that requires it to be automated, or anywhere it can be automated, and that you also have the ability to reduce entropy. And entropy is where, over time, AI models become less and less accurate. And with ML pipelines, with MLOps, you're quickly able to train new models, which is now taking a pre-existing model, and once you've prepared new training data, new evaluation data, and new test data, and then you're able to see if you can improve its overall score. If the score goes up, then that model becomes your new production model. Now, moving away from sort of the development part of it and how that process should be done, I think a significant portion that AI can actually play a role in within insurance that's sort of not really spoken about as frequently. We're always we've in the past tried to introduce micro insurance, and we moved on to embedded insurance, and now we can actually look at behavioral insurance. How do you know when something or someone should insure or something should be insured? Having insurance that is built purposely for me, regardless of whether I'm looking for property insurance, vehicle insurance, medical insurance. So this behavioral insurance then takes the aspect of I myself as a data subject, or as the focus of this insurance product, is how do I, as an individual, fit in within the insurance ecosystem, as opposed to trying to throw products at me. And what this allows is that it allows more understanding of the customer. Of course, then this brings in later on where you could have personalized AI chatbots, personalized virtual assistants for the consumer. And for the consumer, of course, now you have a complete unique set of products that can be offered to me that I would probably not say no to. Excuse me. And this is purely because now that data collected about me has revealed certain behavioral traits, and now products can be tailor-made specifically to my behavior, specifically to what I do. For example, if you look at the gaming industry, a unique place where there is no insurance. Of course, there is cyber protection, cyber security within that space. But if you look at insurance, what happens when I lose my assets? when I'm playing an online game. Maybe I was scammed while playing World of Warcraft or Skyrim or whichever game. Is there insurance for those? So embedding insurance even to the gaming level, putting up insurance in odd places. You've just mentioned gaming. You could put it up in multiple industries, multiple operations of work, and even people's own lifestyles. If, for example, myself as an adrenaline junkie, I could always get insurance on the go. So then this now creates a new system where we move on from we move on from traditional insurance, micro insurance, embedded insurance, and now behavioral insurance, where I become the focal point and products are created specifically for me, as opposed to figuring out what needs to be insured within my ecosystem and hoping that I one day need that product and therefore will need the insurance for it. I think now, to sum up, as you're running out of time, I'd like to say that artificial intelligence may be, controversially say, maybe the last hope that we have to actually increase penetration, use case penetration of insurance products and services, purely because of the vast data that can be used to leverage and to bring up insights that can actually drive true growth within the industry. Thank you.